Everyone, welcome to the update for Sol and BTC. So we had a dump. We landed on a bunch of support around 112, and we actually landed on the base of the oldest one-day range that actually exists since the initial move up to around those 148 levels on Sol, and we got a bounce back to the 118 level, which is pretty much that minimum obligation range move. And now we're just sort of waiting to see if we can get a close over that. So if we do get a close over that, we might find that that original range is actually holding, and then we might get a move back into the 120s. There's a wee bit of confluence for some move back into the 130s, but there's also potentially some resistance forming, which could mean that, whatever move up we do, we just run into that and then dump back down again. So we'll have a look at that. Longs that have piled in on this little mini bounce mean we've now got a pretty smooth ride all the way down to 110, 119. Sorry, 109 if it wants to take another little dip back, and certainly we could easily just dump back to 80k on BTC. There's plenty of longs that have now piled in chasing the pump for the second time actually, because it's sort of they piled in and then they got taken out and then they piled in again. So it's just infinite money. People don't seem to give up. Right, if we looked at the bigger stuff, it's probably all to the upside. So as you can see, plenty of liquidity to the upside, and it's only really if we start looking at things like the 1 day that it's probably going to have a bit of a bias to the down. So everything bigger than 1 day is going to be to the upside. So question today is, do we get a good close? Do we get a trappy close? Do we get a bad close? So yesterday's close was just slightly decimal place type stuff underneath the level, and you can see what happened. When you close just underneath the level, you just particularly in Origin, you just get a violent drop. So yeah, let's have a look at these charts and see what they're telling us. Okay, so Sol BTC on the daily, it's not a good close, not a bad close. It's still just rejecting off the daily trend. If it can close up over body or wick of the prior day's candles, so somewhere around 14058, that can change the intentions a bit. That'll give us a hold level, something we can use to actually break the trend, and it could do that technically 14037, so that would be enough, but you want to get a hold level and a range level if you can, and then you can actually get some decent move to the upside. Now if it was to close blue, this is where it gets a little bit more funky. If it does close blue, it's actually hard closing to the downside for the first time, one of the older Origin levels, and then you could expect to see just some kind of loss of faith in Sol, and a nice little move back down to trend or to the Origin level that it's just bounced off down below. So yeah, we've got a doji candle, and they've got to make a decision. Is it going to be yellow? Is it going to be blue? Is it going to go slightly above the Origin and maybe continue to the upside? Is it going to engulf the candle and actually give us a bit of a bounce? And really only if it engulfs the candle would I even consider that there is potentially a structural change happening. Anything outside of that, no, it's still just down underneath these important levels. So that's where that is. Let's see what that is on the monthly, because we're getting monthly closes before daily close. I don't mind this monthly candle. It's yes, it's losing a trend, but you can see the trend just shifts to the wick. So I've drawn this one on. So when that trend shifts to that wick, as long as it's above it and it can hit it and bounce, that's all that matters. And then that's potentially a bit of a rally that can come in, and then that rally would have basically a day to fix the weekly. So if the monthly was to bounce, it could push the weekly back up above the trends and get the weekly kicking up again. So I guess we'll see how the next 2 days is actually very important to see how it all lands. Right, let's have a look at the safety assets. Okay, so this is exactly where we do not want to be. This is just sitting up over the top of the break level. It's back up over the origin level again. So this whole range can keep pushing up somewhere into the 69 area. We might have something else in there, but not on a daily. And I guess the if you were wanting to try and be bullish, you would argue that none of this is a break of trend, and it really is the next candle that needs to be. Maybe the price pulls back just a little bit, or the percentage pulls back just a little bit and gets back down under these 68.67s or something like that prior to close, and that would be a little bit more bullish, but you have to be pretty bearish looking at that. Where the candle is sitting, it's recovering prior trends, it's bounced off resistance, meaning it's flipped, and it's really just looking to try and break to the upside, and that could be that flush that just takes out, that takes out all those longs that have chased this last 24 to 48 hours. Okay, so if we flip to the monthly, yeah, so we've got a yellow monthly candle now. We're still under the origin and or break, I should say. We're still under the break. We haven't tapped the range trend. It's a little bit trappy. Like if it was to push up and hit that range trend in the next 24 hours, e.g. flush of risk assets, and then reject off the range trend, e.g. pump of risk assets, that might be something that could happen in the next 24 hours, but it's looking a little bearish. Okay, and then of course the weekly, which then closes after that. We've hit the weekly break. We are deciding, do we hard close the weekly origin? If this closes yellow, even after the monthly, so if your monthly candle, get rid of that one, if your monthly candle looks good and it looks like we're going to get some kind of pullback in safety assets, and it looks like we're going to the moon, just bear in mind that the weekly 1 day later could hard close a weekly origin, and a weekly origin is basically the same level of strength as a monthly anything. So yeah, if it hard closes that, then pop, it could go. So just keep an eye on that weekly the day after the monthly. Right, let's have a look at these totals. Right, so if we get a blue candle today, 1 hour and 54 minutes for this thing to pull itself out of Goblin Town. And to do that, it really has to get back above a few different levels. So there's the break level that it's under now, which is 2.55, and it's got to get it back above that. Then we've got an origin level, which it could be hard closing today. And this is hard closing on the totals excluding stables, so it's basically BTC and all risk assets could just dump. And so it's got to get back up over 2.58 for that not to happen. And then, of course, we've got a couple of range trends, which are living just above that, around 2.59. Then we've got another origin level sitting up there at 2.6. So, this candle is currently threatening to hard close an entire ton of what was once support. And yeah, if that happens, any move to the upside is probably just going to be one liquidity grab followed by continuation of the dump. Next levels then are basically going to be trend, because the trend will probably shift. I'd have to go back and just dig into this now because this trend's getting a little bit too local, but it's the trend would shift to the bottom, so maybe we get a dump, a bounce, and then a dump down to break the trend. I suppose it could just break the trend, given there's so much resistance for it to reject off. It could just power through the trend. There is a couple of break levels there, nothing of any real substantial support until you get down to about 2.24. So yeah, looking pretty bearish there on the daily. So let's see what this monthly's stacking up like. Yep. So yeah, we had that 6-month rejection, big rejection. It was from the wrong side of the trend. It's pulling back down. It's continuing to pull down. There is a retest 6-month break level down here that's not been retested since it was hard closed, and that's down at 2.16. So it just doesn't make any sense really for this to be going up. It might as well come down and do this retest, and then after that maybe it can bounce. But so if we now look at how that is coming along on the monthly, well, we're below a trend that will not be relocated if we close down here, so it's not going to flip to support underneath. And if we don't push up the market cap in the next 24 hours, we're also going to be opening just on that range trend, or just under if it comes down even just a little bit more. So the only way for this thing to rally from this point, and it will not be, you're not going to go to some massive bull market from here, because this 6 month is always going to want to play out, and it's going to want to do it somewhere in the next 5 months. It's doing it pretty early, if you ask me, which is always been a bit weird, the fact that it just kind of hit this and came straight down. But you don't get many 6-month levels that just tap to the cent like that and then move. But yeah, if this was to close positively, it's really just going up to get liquidity, which is because people have piled into shorts, and that's all it's doing. And then it will find a rejection, which could be from a lot of things. What have we got? Got a monthly range level in there, about 2.82. There'd be something based on this monthly candle all the way at the top here, so we should probably put that on actually. This is a distribution range. Yeah, so 2.68. That could be a rejection. I mean, it could push through that. Nothing stops it going up to 3 trillion, but it's just, is it worth it? They're only going to do that if they've been buying down here and they want to sell into someone, and then build some shorts and then come back down again. So it just doesn't look, it honestly just does not look bullish. This is a really bad looking totals. Okay, now let's see. Does it look better or worse? Actually, what's the weekly look like? Yeah, so the weekly's just above the range trend, but if that monthly closes bad, it's going to end up pushing this weekly below this range trend, and then the weekly is going to keep on trying to move down. Yep, that's all there. All right, totals. Okay, so daily excluding BTC, so you can see alts look even worse. We're currently sitting below all the origins, the range trends, the resistance trends. The only saving grace here is that we might get a push up to attempt a retest based on these top interior trends breaking. Now, I say an attempt to push up because it's just going to run into resistance, but yeah, that looks pretty bearish closing there. Now, could it go up? Well, if it can recover these origins at, where are we? That one's not an origin, that's just a break, so it's going to be one of these older ones. Ooh, that goes back. Okay, so if it can recover this 853 level, and really it needs to get, you don't want it to be in between these, you kind of want it to recover both. So 853 or 863 levels really needs to do that in the next hour and 48 minutes. Otherwise, there isn't going to be much left to hold this thing. So it's 873 would be the minimum move based on the hold level back here from, where is that from? June of 2025. Now, if it was, and this is where they can get really trappy, if it does that in the next 1 hour and 47 minutes, move from here to here, then, or 835 up to 7.3. If it does it in the next 1 hour and 47 minutes, then it actually creates a good close. If it just hovers down here below everything and then does it afterwards, it's just a trap, in which case it can come back down. If it stays down here, dumps first, then goes back up towards the end of tomorrow and closes up over this blue daily candle, then it could be creating a range off the origins, and that might actually be, you know, a pretty reasonable close and potential reversal. But yeah, I don't know. It's pretty hard to be bullish looking at that. There's a lot of resistance there. Okay, let's look at this monthly. Yeah, so the monthly hasn't quite hit that 806 level, which is sort of where I'd be expecting it to go. It looks like it's, well, it is already underneath the range trend. If it hard closes that, yeah, it's kind of game over, to be fair, if it hard closes that. There's not much support anywhere down in here, so it would be a case of, does it hit the range level and then maybe bounce the range level to go back up? But it's better to hit it tomorrow and bounce and potentially not create the bad close versus create the bad close, hit it and bounce, because the bounce will be limited if it creates the bad close and then bounces. So that's, yeah, you just might not see the price get back up over that 863. So, you know, the 863 is a monthly break. And yeah, so this daily level through here is actually a monthly break. So, and you can see the daily has basically got 24 hours to push back up on its minimum obligation and get over 873, which actually brings the monthly back up from a bad place, which gets it back over the break level, but it doesn't stop it from breaking the range trend. It has to get up a lot higher than that to actually break the range trend, or not break the range trend, I should say. And the weekly is sitting below trend. It'll break some interiors. Yeah, it's still got this 799 level that it hasn't got to yet. You know, so if this just wants to keep progressing in distribution, which is pretty normal looking at that chart, it's going to somewhere in the next 48 hours end up back down here and then smack into the back of the trend and then come down. If it wants to fail this distribution range, then really what it's got to do is it's got to get back up above these trends and then use those to try and push back up. Yeah, that's there's also this older one that is probably in play from over here. So yeah, sitting on a pretty key level right now. A couple of days to go. Right, let's have a look at Sol. Okay, so the low time frame stuff is just laddering up, which makes a bit of sense given we had that daily move. We've rejected the 50% of the range creation there. So it's coming back down to test the hold. Doesn't look awesome for a good pumpy close. What are we doing on the hourly? Yeah, so the hourly is below the trends. It's going to hit a couple of range trends. It could bump, you know, it could push back up a little bit from there, depending on when it hits them. Or it could end up closing low and creating further distribution ranges. It's already got one based off this candle at the top here, and then it's got potentially another one if it stays low. So this is, looks like it might just be trying to do a full round trip again. If it gets all the way to the bottom of that range, then yeah, it's just doing a full round trip of all the people that have chased, and then having a poor close if it stays down there. So let's see. Still stuck under the 4-hour trend. We do have a 4-hour hold, so that's positive, but it needs a bit of a bounce Now, there's also kind of a range trend in there as well, which looks like this. And the range trend indicator has disappeared. Okay, have to fix that. So yeah, so we've got a little bit of structure there to try and push it up, but there's just not a lot of time left in the day, so it has to be a pretty quick move. Get it moving before close if we want to close at a good level in the bigger scheme of things. Okay, daily. Okay, so this was the old daily range, which topped out there at 147. It's come all the way back to the base of the range, which is down here at 112, and then we've had that sort of range bounce up to that 118. So that was the traded move done, but there's nothing really bullish about this unless we can get a close over all this resistance that's up here. So it looks like at this stage, unless we get a pump in the next hour and 40 minutes, we're probably going to hard close below all of the support, in which case just expect more dumpies, more down. All right, let's have a look at the weekly. So the weekly rejected from the top side. It's kind of just sitting above that range trend. Doesn't look very good. So if we get a weekly close down here, we're losing some pretty key support. The all of these longs that are piling in are basically building a path to come down to this support, which is this 109 area. So like it just, yeah, you can see it happening on the heat maps. You know, we push up, people start chasing, all the liquidations down in here, and then we go, and if we do a hard close under these 120s for the week, then we'll just most likely end up rejecting off that 120 area and then pushing back down to this 109. 109 is sort of where the 3-month origins and stuff sit, so it's possible that could be a thing to give a decent support bounce, but there's not a lot of buying going on on Sol. All right, let's check out. Actually, let's just. Yeah, this is some of the bigger stuff. When we came down and we hit the hit those 112s, we also hit things like 57-day range trends, reverse range trends, which is why we got a pretty decent amount of support kicking in. But we're underneath the break levels and such, so getting back over 125, regardless of anything you see on this, is pretty unlikely. 109 again, massive origin level just coming through at 109.417. So it's more likely we come down and hit that just off numerous time frames, and then maybe we can get a push back into the 125 plus area. It's all about timing. Just all about timing. Okay, so these other time frames, where are they? Okay. So 2-day. I mean, the 2-day is basically just wrecked, as you can see. It's in a really bad place. So ever since they pulled back that engulfment, a few days ago, that went from we could create holds, ranges, pump, to no thank you, and down it went, and it was under all the resistance and so on. And then as you can see, it's taken a nosedive. So at this stage, we're underneath the break levels. You're going to start seeing how important a lot of these levels are at the moment. So this is actually a 2-day origin coming through here at 117.517. So you don't want to close under that. If you close under that, it's like the daily one we closed under recently. It's just going to be dumpville. So it's just not looking good as far as any kind of sustainable move to the upside. So there's your first key level, 117.517. Okay. And Now the 3-day. So the 3-day had some of that support down around 112. So there's lots of support down there, whether it was 57-day, 3-day, daily ranges. It was just an area of multiple confluence, and it's done a bounce off that. But if it doesn't get back up above the other origin, which is 119.758, then it's probably just going to break down. It may at this stage close just above a prior broken trend, maybe. That could push up, do a test of these areas, and then then dump. But it's it's looking like a pretty horrible close unless we get a push. Okay, 4-day break level is sitting down here at about 119. So you can start to see 119.157 becomes the next key area. If we don't get back over 119.157, then we're in a bad place, and that would be pretty confluent with everything on the 5-day, all sort of around 118 plus. We may do this hard close of the range trend. That's just going to mean more dump. So the 5-day does have a range level. It's going to open over top of the prior broken trend. It's got that support there at 112, which is just confluent with everything else. The bounce off that is pretty much just been restricted by the fact that this candle is not getting back above these levels. And we are going to get a hard close. So the hard close of that 121 break level might then allow it to just push through this in the next 5 days. The hard close of the range trend. So these are all just very risky if you're thinking of longing. And you should really be thinking like these are areas I should just be taking some profits off the table if you are in a profitable long. Because we're coming from the wrong side of just so much. And we could go up and do a retest of the range trend about 125. We're already rejecting the 127 resistance. It's not breaking any trends. It's just not great. The next 5 days do not look good. Okay, 6-day close below the break level unless we get over 121.833. Finding that, it could just become resistance. So it's looking, and this is just nasty. It's moved so far away from the trend now without breaking the trend that even if we do have a good 6-day candle, the retest of the trend could just be an epic dump that no one sees coming. At this stage, you're talking 86, 85 just to get back to retest that trend if it breaks. So that's pretty bad. And you've got, just based on the older structure, you've got another level there about 119.157. So I think the 6 days changed recently. And either way, unless it's over 119, it's not over anything good. Okay. Now the 8-day. 8-day still actually has trend, but this is the type of move that just can break a trend really, really easy and really quickly. So you might get a push into the 120s once this trend moves, but it's coming from the wrong side of the resistance trend unless it gets back up. And really, there's nothing good about this close unless it's up over the 120s by the end of the day. Okay. Then we've got things like the 10-day. We're going to be back under that 125.9-ish, which was that horrible area, that 125.919, which was that area we were stuck under for a really long time. And Yeah, 125.916. And it may even stop. What is this? 118, 119. So yeah, it needs to just move up a few dollars before the end of the day. Otherwise, guess what? Just another one of those bearish closes. So 118.363. Even then, it doesn't really have a lot of hope of a sustainable move to the upside. So there will be some trends and things shift on this, which might actually give it that bounce, but it's got to hold it. And if it can't hold it, it's just toast. It's going to lose a range trend. If it does a retest of prior broken trend and of the range trend in the next 10 days, it might get as high as like that 131 area, which would take out basically all of the shorts that have piled into Chase. And I imagine that would bring in a lot more longs if people saw the price, jumping up 10 or 15 bucks. But it's all it's just all from the wrong side of all the high time frame stuff. Okay. And 12-day. Trying to think why these charts have changed. Right, there we go. 12-day. Right, what do we got here? So we are below the origin there at 121. It's all pretty nasty. We're back inside the original 2024 range base. It's quite possibly the lowest close we've had since being in this entire move. Anything below that 118.859 is very bearish, but of course below 121.621 is as well. So that's not looking good. Okay, what's going on here? So the 15-day hasn't quite completed its move back to that 110 area yet. So we've got the distribution range from October. This is good old October dump distribution. And yeah, this rejected here at the 148, and really it should be coming down to try and hit this 110. Now, to not do that, it has to get back up above these origin levels, and they need to try and push back in the other direction. So the lowest one of those is 118.304. So if it sneaks above 118.304 before close, that's kind of one of those little intention signs that just says this is, maybe a little bit trappy. There won't be a hold level. There's actually another candle here you can't see, but there won't be a hold level there. So yeah, it kind of needs to get back up inside there. Then it might move up. Failing that, more down. So as we've got very much the same on the 16-day. Got to get back up above that 118.304. But just this has got a lower level to get to, so this is going to try and get down to 109. Now there's a couple of ways it can do that. It can just have a really bad close like what you see now, and then just down it goes. But there isn't really any support down here on this time frame, so it could go a lot lower. The other thing it could do is push back up in between the two origins, and that's kind of one of those more trappy things where it can bounce off one and wick up into the other and then come back down and do sort of like a good old Darth Maul liquidation in both directions. Or of course, if it got back up over 121.717, then we suddenly take off our bearish hat and put on our bullish hat, and we might get to go back up again, because an origin level can stop a range from creating and continuing. So it's it's all about what happens. And what do we got now? 1 hour, 1 hour, 1.5 hours. So yeah, we're moving into that magical time where they may choose to pump something. And what else we got? We got potentially a new hold level here at about 122 or above. Maybe a new range. Don't know if I... It all depends on whether this closes down here, but it'll get another potential range, something like that. And that brings in that 106 area, which we know that 106 area is that daily break, or sorry, it's the daily hold. So if it comes down and hits that, that's the final daily range being tested for everything from back here, which was that whole April move. That's where the final daily range is sitting. So we may get this close today. It may be a bad close. We might push up, or we may just dump. It could be like some of those prior days, because it's just sitting just at the levels where it only needs to move like 50 cents and then it can just dump. But if it gets back above them, then yeah, might be a different story. And yeah. Okay, so this here at 116.793 and 118.304, if we get a close above 116.793, it actually can push from that straight back up here into the body of the hold or into the backside of the trend. And that is about the only thing I can see today that's pointing into the the mid 130s, like 133, etc. And then there'd just be resistance there when it hits the hold. The other outcome from this is just to close below 118.304, could just create a dump. Target would be, well, target would be something low because you're kind of running out of support. The other option, of course, is it just goes below 116.793, closes there, and it could just be instant dump, like what you've seen a couple of times this week, where we just tiny little 1 minute wick back into that and then down. So yeah, all possibilities from this, and this range is pretty brutal. It takes it all the way back to the original hold from 2023, which was the start of the bull market there. So if it travels the whole way through. Okay. Let's see. Yeah, so 30-day. Actually, what's that? That's wrong. Okay. 30-day. So we're down below 120.487, that really strong level that we bounced off. So we hit that. We bounced up here to that 146 area, and we've come all the way back down. We're on kind of on the wrong side of everything, really. Looking at this. Just double check these trends. That. Oh, computer is laggy. Okay. Yeah, so we're definitely on wrong side of trend. We're creating a hold level. That hold level would be about 121, 122. And we do have that incomplete range move to 89, still pending there. So this is looking pretty horrible. Okay. And then we look at the 48-day. So this is possibly going to open just on the wrong side of trend at this price. If it doesn't just push up even just a tiny bit, it's got to get up above that 119 area. then yeah, below trend. Now, it's not a hard close of this origin up here. So if it can just stay above the trend, it might give you a move up into the 130s. And so that's the second thing we're seeing there that's got a wee bit of confluence with liquidity sweep back into that higher level. This 115.910, this is the hard closed break level of the 2022 range. So that's pretty old. You definitely don't want to be below that. And we do then once again have that origin down there at 109.417. So I guess the thing is you want the price to close above trend. You want it to be above these break levels, etc. And then if it was to go on a liquidity sweep to the downside into the support, the chances of that then bouncing are very high. Like what you see over here. It doesn't mean that's not a bad thing if it wicks down and then comes back up, but it's just very bearish if it does it from the wrong side of the trends, or if it does it from the underside of any of these support levels or break levels. So yeah, it's at this stage it's teasing. It's just sitting right on the fence. And yeah, if it doesn't push back up in the next hour or so, it's pretty bad. Pretty bad is today's drinking word. Okay, let's have a look at BTC, because that was a really long look at Sol. Okay, so looking at the hourly, BTC looks a little bit better. There's a couple of 1 hour ranges in play in here. And so we've got the original one from the reversal. So that was a trade I took. Now we've now got this one here, which has come off an origin and fully engulfed. And it's just sitting above that level now. So if this candle can get a little bit of a move on, it might go up and hit that 84.8 level prior to close. And that would be coming up above things like the little range trends and all that sort of stuff. Now the original range is actually a bit bigger, and the midpoint of that's about that 85.7. This local range, the top of it is about that 86. So I think there is a bit of confluence here with us going back to 86. The question is, do we do it before the close, which is actually going to be quite bullish, or do we do it after the close, which is going to be potentially the trigger of a bigger dump? So that's what that looks like on the hourly. The 4 hour range hasn't come up and hit the 84 point. Did I open that? Hope I opened that. 84,637. So that needs to just give a bit of a push up. Seems to be going a little bit slow, but we are on the last 4 hour candle. So yeah, I don't know whether we're going to get to the 86 point prior to close. It would be pretty bumpy to do that. We have seen stranger things, mostly in the other direction recently. So the 82, we hit the range trend. So this is all on the daily. So the daily's kind of done a dump. It's hit the supports. It's hit the trends. 84.120 on the daily close is the first important level, because it's got to get back up inside the daily distribution, in which case it could push back up here to do the test of the 85.901, which is also where all of the hard close range trends and everything will be if this closes blue. If this closes yellow, totally different story, because none of that stuff up there is then broken, and then that just kind of means the dip is a troll and it's heading back up. There are numerous resistance levels in here that it's all below. So like if we just scroll this back across, so yeah, all of these levels above, all of these support origins, etc., they're all going to break. Now, when they break, they do have a tendency of being retested, which is just adding more confluence to us traveling back up into that whole sort of 86 area. But like I say, once we get to the bigger stuff, you'll see that doing this before is actually doing it before is bullish, because it gets us back inside those areas. Doing it after is actually bearish, because if they've converted to resistance in the higher time frames, then it becomes something to reject off. So what's the highest this could go? Well, we bounced a trend. If it keeps pushing in the next hour, the highest it could probably get is about the 88s, but it would have to do that now. As soon as this thing closes, then it's got more resistance levels above. Okay. So weekly coming up. As you can see, we're below the origin. Not ideal. And so it needs to get back up above that. And that also is the base point, perfectly aligned. That is basically the point at which, if it doesn't get above that by the end of the week, then it can just reject off that and head down here to 77. If it does get back above that, then it can bounce off that and head back up here into the hold. There is going to be a weekly trend break and shift if it stays below as well. So that could then also give it a push back into the hold. So it looks a little different when you compare it to Sol. Sol definitely looking weaker. Oh, computer, come on, computer, don't get so laggy. Okay. So looking at it on the just bigger picture wise, 4 months still has to get down here to 74k. Hasn't done that yet. Monthly range trend is bouncing. So if the monthly range trend can get this candle back up above the monthly normal trend, then you can potentially flip to being a little bit more bullish for a while. But unless if it doesn't, then the range trend is going to bounce, and if it just stays around this area, it'll open under the trends, probably hit the back side of them, and then come down to break. So yeah, that monthly close is going to be pretty important in a day. Okay, let's have a look at these, all these other time frames. Oops, one. Okay, so 2-day. It's hard to be bullish on this. It's just hovering above good old insta-dump. So, you know, below these sort of 83.8-ish levels, this sort of area just in here, if it closes below those, it's definitely, come on, scroll. Yeah, it's definitely underneath some pretty big stuff. And then as you can see, big air gap all the way down here to 78. So just, yeah, any kind of close under there on the 2-day is bearish, very bearish. Now the thing is, though, it's still actually pretty bearish to be closing anything below 84.640 or even 85, even 87. It's all actually quite bearish. Okay, so that's yeah, short version. Doesn't look good. So let's just see what this distribution range is doing. Yeah, so 85.2, 87, it's all pretty confluent. And then potentially anything rejection there, back down to 81, and then 78, and then 75s. So that looks like it really needs to get back above these horizontal levels or it goes down. So let's have a look at the next one. Yeah, so 3 days a bit of a doji. So rejected from the middle of the range on the way up. So it's AKA 50%. And failed to create, don't know what that was. Oh, that was a scalp. And then we did that scalp. And now we are back below everything. Okay, so this could get it back to 86. So this is the first sort of time frame that sort of shows maybe we go back to 86, but we are below the range trend. We are below the prior broken trend. So you're kind of saying, okay, if we stay above 83,912, we might bounce off that and head back up to 86. Could we go to 89? Maybe, if 86 doesn't hold. Yeah, kind of hard to be bullish on that. Doesn't look super flash. What do we got here? Yeah, 86 again would just be heading back up and hitting the break level that we're below. Starting to see a little bit of pumpy action coming in now. Just looking at the 1 minute charts. We'll see. So any closes over this 86 area, that changes things a wee bit because it just sort of shows this whole distribution's a troll, and then it gets back up inside there and it may come up to try and actually test something as high as that 89. Trend is going to shift to the downside in here, so there's a bit more to bounce off. Even if it just gets back up above the range trend, then it sort of indicates this is a wee bit of a trolley liquidation event, and then we might bounce off that and head up, but running out of time to make the close good. Okay, so 4-day we hit. So we hit the support. Where are we going to go? More confluence with 86. We're back up over the older range level. So this is the type of thing that was a move, very similar process to what we did on Sol on the daily, where we went from 112 to 118. This is just a bigger time frame. But if we close over this 83.7, then you could come up here to test the backside of the origin at 86. That's probably the most common sense thing, and I wouldn't expect it to go higher. But if it did try to go higher, it could come back up here to retest the trend and also just bounce between the range levels, which is that 89.5 area. It's possible. And so 5-day has bounced off support. Very nice little touch there. Any close over that 85.29, 85.7, basically closes over 86. Change the story. Other than that, 85 to 86 is all just resistance for this on the next candle. Six days got back above an origin just as long as it stays above the 83.9, but it's underneath all the trends, so that's not ideal. It hasn't hit the 79 range level, and the origin may stop that from happening. There is another one there too, which didn't quite get tapped, which is the just under 81, so 8788. So that hasn't been hit. And 86, of course, is the range base. So there's a lot of confluence with maybe it goes and gets to 86, but I, again, wouldn't be too bullish on it getting out of here anytime soon. Above 86 anyway. So 8-day. 8-day has a break level it's going to close underneath, which is around 86.7. So that would be first idea. And it's going to be under a trend, which is going to be about 85.8, 85.9. If it goes straight away, then it's around 86.1. So that's also not a lot of confluence with that 86 number. 10. Okay. So this is in a distribution range. 89 would be a retest of the start of the hold. So these are the time frames that are actually where the resistance is actually quite close to where the current price is. So you got that break level sitting in there. Actually, this is a 10-day close. Sorry, this is a 10-day close on TradingView. So this, what do we got? in other words, the left-hand side actually has a few more days to get away from where it is, up or down. So bouncing off the trend, opening over the top side of the trend. If it retests the break level, 86.7. So that's just got a bit of confluence with being able to move back to 86. It's also going to lose the range trend. So they could go and sweep that upper liquidity up to 90 based on that. Okay, 12-day. It's not really much going on that 12-day. That range is kind of broken. There is one that's all the way up here, which let's see where that's sitting. It's so hard to do this with laggy computer. Yeah, you can kind of see it's just hovering on that level. So it's bounced between. Actually, I need to do this right. If I don't do this right, I'm just going to pause this for a second and get this right. All right, we got it right. Okay, so don't get your hopes up or anything on this one, but if it does close over 84,009.1, it might kick off a range move, and it can take a long time. Like the last one was, what did we do? 12, 24, 36. Yeah, took a long time, to move from the 84 up to the 96. So if we close up over here, then maybe we do kick off another range move to the upside. But also just bear in mind that how important that little line is that if we close under it, well, the next part of the range is 71k. So just, yeah, BTC is definitely looking, ooh, ouch. Now, if we hit 71k, we've broken the break level of basically every single high time frame long from April. And yeah, that's kind of game over for BTC. Right. 15-day. Okay, so the 15-day may be showing a move to 87. Certainly trying. So if it closes positively, it could take another sweep down to the range trend, which hasn't had a first touch. So that's down around that 80k mark. And then from the range trend, it may bounce back up into the hold. So it's not to say they don't do one final hit of all the longs and then maybe come back up. Much more bearish if it goes up first, traveling up into that, runs into the hold, rejects back down to the range trend. So what would that be? 87. You'd probably want to be very careful of the 1v2 scenario here too, which means that the wick of this candle, which is actually probably, let me guess, 86. We'll just guess. Let's put a line on here. Yeah, 86.7. Probably just want to be a bit wary of that. It may not come up into the top. It may just bounce off that one. Okay. So this is part of the bigger 16-day distribution range. It's already gone from level to level and back again. It's creating a resistance hold. Starts at about 86.8. It's back inside the hold candle, which is 88.5. So it's looking, there'd be a reverse level based on this hold here as well, which is probably about 90 point something, 90.4. Yeah. Long term, that's quite a bearish place, even though you may see a pump after close up into this. And back inside the hold. 88.5. Any close below, actually, what's this on? Oh yeah, so this is actually one of the ones you can't see on TradingView. Any close under 84.415 could be instant bearish, and any close above 88.415.7 could just sneak back up inside here and not create the distribution range, which would be bullish. So that's, funnily enough, sitting within a couple $100 of that now, with not very long to go. So just got to watch ones like this, because these can be these instant dumps where it just creates it, taps it, 78K before you know it. So just and 30-day going to get a hold. It's going to be sitting at about 86 from the looks of that. We are bouncing off the range trend, but we haven't really gone up into anything. So this may go down, then up, then down. Very possible. This is sort of like if you're ever taking a trade off a range trend like this, so you're long here, which would have been, what's that, about 82. And then what you're actually aiming for is you're aiming for this hold up here, because that is the hold at the time, which means you're actually aiming to go all the way up to 101. The problem is it's so slow and it hasn't got anywhere near it. And what it's going to do now is it's going to close the candle and it's going to create a hold lower down. So this is why you can't just sort of sit and figure your TPs, because the actual resistance can move. And so now at this point, you know, your 101 plus TP pretty much goes out the window, and you would look to be TPing around that 86 area, which is probably, let me guess, yeah, 86.7, 86.8. Anything sort of up into that hold would be the place. And could it go higher? Yeah, it could break it, but you wouldn't want to bank on it. So that's where that's at. And finally, really big stuff. So we have 86.523, which is a part of the distribution range on the 48-day. We have an untested break level down here at 72, so it's going to want to come back and test that at some point. And we have the next range level at 62, then 37, then 13,000. So this is basically like a complete reversal of the entire bull market, if this happens. But I don't know whether that's going to play out. May just get to the second level here. Maybe spend a bit of time down in here. But certainly I would be keeping a very close eye on 86. So anything above 86, bonus. But yeah, 86, looking at that is the first resistance across the board, confluent with just about everything. So yeah, that's us for BTC. If we do somehow have a magic pump in the next 57 minutes and close over 86, you can disregard pretty much everything in this video and just look at some higher level. And if we close under 86, then whatever we do, that's probably going to be where we start to run into some pretty big resistance. And there are some options there where, like, you can just open tomorrow's candle, move up by a couple of, you know, cents, dollars, etc., and then just dump. So just yeah, we'll see how it goes and how it closes, and take it from there. All right, catch you all again. Bye. Oh, hey, those other ones, better do those. All right, so Tesla bounced between the two origins. Huge differences in open and close, like so much is happening post and pre-market. Yeah, in between two origins, under the trend. Based on how much this thing can be moved around post and pre, it could just end up back up in a supportive area, or it could end up in a really bearish area. So there's not much there. Weekly, same thing really. If it was to get pushed back up, but it would have to, they'd have to undo the hold level effectively. So get back up above 137.85 for the close, or for the open, I should say. Other than that, if it just stays down here or goes any lower, then it's below the trend. It'll open under the trend. It'll reject, and it will head down. So that's looking MicroStrategy. So it's bounced back to trend. It's pulled back a little bit post market. It's under the break level just. Hasn't actually technically tested this 137, or sorry, retested this 137 broken ranges down here. So these are waiting on retests. So it's doesn't make a lot of sense for that to not just come down a little bit more and test those. So it's probably not the greatest close there. And actually, let's just quickly look at the monthly. I don't know if I have enough data on this for the monthly, but we'll see. Yeah, okay. Typical. So maybe a monthly hold level, just that's funny. Guess it all just depends on what happens post-market, pre-market, but yeah, 430 could create a monthly hold to the downside. And arguably this one, you'd have to look to see whether it went up and then down in that month. If it didn't, then this is still trying to come down to these lower levels, 415. I'd be more worried if it did come down there and then actually stayed down there, because then it would be a full range engulfment of this candle and then ouch, down goes Tesla. So that's but at this stage it doesn't look that bad. Okay, what do we got? MicroStrategy, should we just check out the monthly on that? Well, it's inside the hold level. People need to tell me in the comments if they're still into this as well, because it looks pretty cooked. I'd say if you've sold it all, then why are we still looking at it? Right, yeah, possibly closing below monthly trend, which is not what people probably want to hear. If that's what it does, then yeah, inside monthly hold, below monthly trend, not looking so great. Down to monthly break. And of course, we are still waiting on things like these 80, 81 and $74 retests down here. Just these, I was sort of expecting these to be more like deep into the bear market type stuff, but we do have ones down at $36 and $50 and stuff like that as well. So it could just be time to bring it down further. Can't really even put a monthly. At this stage, you can't even put a monthly downtrend on this to break, because it doesn't even have another yellow candle in the monthly. It's just been down, 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 down. Okay, what's ASTER up to? So I think they've just run out of liquidity to take on ASTER. So it's just hovering around on the daily. What's the monthly up to? The trend might get slightly better, unless that's already bounced off. Let's see. Oh yeah, it's already bounced off the monthly. Don't quite remember it getting to that level, but maybe it did. Let's see. Ooh, near miss. Okay, let's see, distribution range. Yes, there's not much to look at here. Because it's quite new, there isn't really a lot of information on the monthly, but it's sitting on the right side of the trends. I guess it's probably could be a rounding error that it just missed that monthly wick on that rejection. Could be a rounding error. But yeah, nothing else really to look at there on the monthly. So does it push up? Maybe. Does it go down and bounce off the trend again? Maybe. Pretty hard to tell. Okay, weekly. Just see if there's anything a bit more clear on there. Let's see. My computer is in need of a reset, I think. It's kind of very laggy. Okay, let's see. Oh, yeah, okay, so it could could go either way really here. So next couple of days you could get a blue candle, which is going to be a loss of trend. Or you could get a yellow candle, which is going to be a break of downtrend. So pretty much just a doji on the fence. And I've run that off the wrong thing too, so let's just fix that. Should run it off that. Yeah, that's better. There's our weekly touch. So yeah, it may be indicating a slightly better trend. Even if it does break, it's still not, it's sort of moved to something like that. And if it doesn't break, then it's a break of the downtrend. So yeah, it's underneath break level. So yeah, blue candle weekly close, bearish. Yellow candle pump back up in the next 2 days, bit more bullish. All right, that's about it. Okay, I better get this thing uploaded, and we'll catch you all again on the next one.